You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, at least we tend to think so, Options Insider Radio Network, reminding you, if you like to go above and beyond, you like to get exclusive content, including options oddities coming up a little bit after this program today, and of course, get access to all of our giveaways, the live streams whenever your heart desires, and a whole bunch more at theoptionsinsider.com/pro. Or for you cool kids out there, /secret club. About to give away, coming up on Monday's option block, I believe, we're about to give away the June Pro Trading Crate. So make sure you get your name in the hat soon to be entered for that one. Should be fun. If I sound a little bit different today, it's because I'm down in the southern studio still for the next couple of weeks, taking a nice little hiatus from the Chicagoland area here. So should be fun. Should be a fun show. A lot to unpack on this week, even though kind of an interesting end to the week. We'll get there. But first, let's see who's joining me on the old program today. First, let's go out to the southern volatility mecca known as Austin. We are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program. How go things in the southern volatility mecca?
I am in the northern volatility mecca of Rochester Hills, Michigan, at my in-laws.
Oh yes, the other forgotten mecca for volatility.
Well, everyone knows it's Chicago, Austin, and Rochester Hills, Michigan. That's where all the options take place.
That's where all the business is done.
So, things are great. Kind of an interesting day, interesting week. And an overall general obliteration of volatility. So, very interested in how low vol is, how low vol is as a whole, and the overall performance of the market, even though it looks like 3,900 is failing right now as we speak.
And then also joining us today, holding down the MIAX hot seat, our old friend, Mr. Jim Carroll from TOROSO Advisors. I guess he's beaming in from the East Coast Southern Volatility Mecca. Did you say you're down in Charlotte, Jim?
Charleston. Just a little south.
Even farther
Charlotte.
south. Yes.
Yeah, even farther south. South Carolina. And Mark, you obviously missed Sebastian's tweet the other day of the Portillas song.
Yes.
It gave away that he was not in Texas right now.
Yes, that's true. I did miss. I saw that later, so I should have put two and two together here. I saw that and I was kind of surprised. I was like, oh, they have Portillo's in Texas now, but apparently the answer to that is no. Even though they do have them down here where I am in Florida now. So Portillo's continuing to extend its empire. By the way, Jim, I saw you tweeted about the show today, and someone said, good luck coming up with something to talk about today. They obviously have never listened to the show before. We have a whole week to break down. So let's get to it. A little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
Everybody, let's do it. Let us commence the volatility review, the portion of the show where we look back on the week that was, and indeed still is, from about trading and trending and analysis and all sorts of fun perspectives. And as Mark alluded to, we are having a little bit more interesting day than it's set up to be. It seemed like we were selling off a little bit earlier. Then we got into the green, and it seemed like we were going to end the week pretty firmly in the green. S&P heading north of 3,900. And now as we're kicking off the show, we are heading back in the other direction. We've got S&P off about 1/3%, the Dow off about 1/4%, and NASDAQ closing in on 0.5% to the dark side. So S&P once again breaking through that 3,900 at around 38.88 when we kicked off the show. It seems like it bounced off 38.75 this morning, right around that level. We'll see if we can get back down there again, or perhaps explore lower depths. That means all of our vol friends were kind of eroding going into the weekend. Now they're getting a little bit, just a little bit of that juice back. Spikes when we kicked off the show was at about a 25.5. That puts it down about 2 points from where we were this time last week. VIX cash was at a 25.30. That puts it down, about a little over two, about 2.25 points from where it was this time last week. Then we got VVIX at about an 84. So again, we've been watching this for a while. The vol of vol. Triple digits is where it's been pretty much for the entirety of the post-pandemic era. And now here we are back below triple digits, down another 5 points to 84. So how low can vol of vol get? That is the question. The other measure we like to use for vol of vol, the VVIX, a.k.a. the Viking, which Mr. Meatball, I believe, has not been paid for yet for his branding expertise, got down to a 98. That's down 11 points from where it was this time last week, and that puts it, looks like, at a new low. That's a new low for V-Spikes. Previously, the low was 103.63, set back on June 28th. So we are plumbing new depths to the dark side in terms of vol of vol. So a lot to unpack. Let's start in the southern volatility mecca on the East Coast there in Charleston. Mr. Jim, even though, despite what that Twitter person said, there is a lot to unpack this week. We have a bit of a weird turn to the week here. Today, we had some interesting movement this week. And of course, vol of vol continues to just go the way of the dodo, sir. What has been lighting up your tape this week?
Well, you know, it is one of these conundrums that we appear to be in, where there's plenty that seems to be on the nervous side of the ledger. And yet, you know, from a volatility perspective, things seem deadly quiet. But there's conflicting evidence, right? Because VIX is stuck in the 20s, it would seem. Meanwhile, as you pointed out, VVIX, V-Spikes are plumbing new lows. And the term structure is still pretty flat. A little bit of contango back, but when you look at the fact that the entire term structure fits in a 3-point range, it's just not telling you very much. So I think everybody's asleep.
Yeah, well, it is getting into that time of the year. People are heading out maybe for an early start to the summer weekend. We just came off a long holiday weekend as well, so folks maybe continuing the party out there. I'm curious, Jim, it's been a little while since you've joined us. Obviously, we've seen a wee bit of back and forth in the market since your last appearance, a wee bit of back and forth from a vol perspective as well. Why don't you catch our listeners up? What are your thoughts on this tumult we've seen in the market over the past few months, the vol ebbing and flowing, and what are your thoughts on where we're hanging out right now from a level perspective, sir?
Sure. So obviously, since the start of the year, and really in certain respects, since the end of November, equities have been under constant pressure, and volatility has been moving higher, measured by the VIX. But we haven't seen that capitulation. We haven't seen that spike that everybody's been looking for. But and it's been discussed in other venues, and I'm sure on your show. It's really been the grind down. As I've pointed out to people, if you draw a straight line from the lower left to the upper right, which is what everybody wants to see in their equity curve, there's no volatility in that straight line. But a straight line from upper left to lower right, which nobody wants to own, also has no volatility. So really, it's the slow grind. It's kept VIX up in the 20s, but it's refused to spike, because everybody feels like they know that things are going down. And so it's been relatively boring, but there have been a few little morsels in here that people could take advantage of. I'm sure our friend Mr. Sebastian has done so.
Well, Mr. Meatball, let's go to the southern volatility mecca there of Austin. What has been lighting up your tape in kind of a weird week, sir?
Yeah. Mark, it was funny and Jim, you'll get a kick out of this. I was giving an interview on Friday, and the person asked me, because this market feels a lot like, let me start with this. This market feels a lot like 2002. Post September 11th, call it, after we got the initial massive selling on September 11th, and then we rebounded. The market then proceeded to drop about 20%. And over that period of time, we did not really see any big spike in implied volatility. We did get a lift in the summer of 2002, in July of 2002, that basically kind of told us that was the market finally finding a bottom, a near-term bottom. And that's kind of where we are right now. We might get a push higher in vol when we finally start to get near some of those bottoms, break some of those levels that everyone's hanging on to. That 3,700 level is really important right now. So I was kind of explaining the situation, and the reporter asked me, and back in 2002, VIX got up to about 45, and that's probably about what we're going to get here. And the reporter asked me, well, what was a 45 VIX in 2002 equivalent to today?
Hopefully you kept a straight face.
I did.
Did you say 264?
Well, no, but what I turned around, I said, well, a 45 VIX is a 45 VIX, but remember the S&P was about 1,200 when it started. So the size of the moves were totally different than back in 2002 than they are today. That was how I responded, which I thought was the respectful way to tell her or him. This person will remain nameless. How little they understood what they were talking about.
I find it hard to believe that a reporter on a mainstream financial outlet would have no idea about the VIX levels. You're shocking me here. You're stunning me.
I know.
But yeah, interesting stuff here. And this little bit of a turn today is causing a little bit of fun out here this week. Let's get on into some of the vol products. Let's start in the land of the futures. We were waiting for a while when all the kind of tumult was popping off. Would the vol surface go backward? We were kind of waiting for that. Never really got to that juicy backward state. And over the course of the last week, we have been trending lower. We were talking on the show last week. There still is this little bit of a blip right around the October and November timeframe, obviously due to the midterms there. So we go from around a little north of 26 on the July future to about a 28.60, so about almost 2.5 point premium there. Then it kind of comes right back off again towards the latter portion of the year. But intriguing stuff nonetheless. Coming into the start of today's show, that front portion of the curve where a lot of the action is continuing to come down, as you might expect. And we kicked off the show, that July future was down almost 3 points from where it was this time last week, about 2.7 points. So that's coming in pretty aggressively. August, a little bit less so, but still a pretty decent move for the August future, down nearly 2 points, about 1.9 points out there. Mr. Jim, anything catching your eye out there in the vol surface this week, sir?
Well, it's kind of kept that shape, right? Where we've seen that little October, November bump, a little dip in December. And just, again, I will reiterate, very flat. There's a little bit of curvature at the front end, but that may be enticing some people to try to get on the short side of this thing. But I think that's fraught with peril. Be very careful.
I concur, Jim. I think you're right. You're right. The surface is in a contango, but we've seen the VIX go above and below the curve while it's stayed in contango. It's been very difficult to be short vol in this environment. You're better off you're better off day trading vol or trading indexes than trying to just hold firm a short position in VIX, because they're just going into nowhere. And with where vol is, we could see futures make a strong move one way or the other if we come in on a Monday and we're down $70. We could easily see that a move like that happen.
Well, let's see what kind of moves we're seeing out there in the vol products beyond the VIX futures. Spikes futures obviously still ramping up into the launch of those ETFs that should drive a little bit more paper out there, which I think everyone is looking forward to. Spikes options, same deal, still hanging out around similar levels what we saw last week. Those July pars continue to persist out there in the SPYs. So somebody hanging out on the par strike in spikes, which I find endlessly amusing week after week out here. Let's go on out to the VIX options this week. And today, not a heck of a lot of paper, but it seems like if this warm continues to turn out here, we might see a little bit more action out here in the vol products. Because right now, about 230,000 contracts on the tape in VIX. It's decent paper, but nothing to write home about. The ADV is 484,000 contracts right now. That's up about 9,000 from where it was this time last week. Again, usually a gentle drift into the green like we were having earlier in the session today doesn't translate into a lot of VIX paper, but now that we're turning to the dark side, S&P closing in on 0.4% now, maybe that might drive a little bit more action out here in the vol products. VIX tends to like a nice red day in the market to really drive a decent amount of paper out here. Speaking of paper and volume, let's see what the top positions are out here in VIX land right now. Kind of interesting, actually. We pay attention to the breakdown of the top 10 size positions in VIX every week, listeners on the show. And right now, you're kind of hard pressed to find any puts in the top 10. There are only two. It is 80-20 calls over puts in the top 10, which is a little bit surprising, I have to admit, especially given the direction that vol has been heading for the better part of this week. Let's break it down here. It cost you 140,000 contracts to break into the top 10 this week. That's a pretty hefty amount. That gets you to the AUG doubles, aka the AUG 55. So once again, the ludicrous strikes popping up here on our radar first. Number 9, 143,000 of the first of two puts in our top 10 this week, the July 25 puts. Number 8, $1.48 of the July 35 calls. So dare I say it, a reasonable call compared to a lot of these other ones. Number 7, $1.50 of the March 75s. Oh, now he's starting to play in March, Mr. Meatball. Wow, this guy just has, or gals, who knows, multiple people. They've really just loved this 75 strike. $1.50 of the March 75s. Number 6, $1.50 as well of the second and final puts in our top 10. It is the July 20 puts. Number 5, 154,000 of the SEP 75s. It just never ends. Number 4, 159,000 of the NOVE 80s. So now we're going up to the 80s. Number 3, 167,000 of the July 60s. Number 2, this is probably the most quote unquote normal call strike available here. 205,000 of the July 30s. Then we go back to the ridiculous again. Number 1 remains, listeners, the OX 75s, 310,000 contracts. Jim, this has been a topic we've been remarking on the show for a while now. It seems like, the vol space tends to go with trends. People discover 1x2s. They discover the majesty of buying puts or calls or ratios, whatever it is. It seems like right now the trend is just gobbling up all the crazy upside you could possibly imagine. Look at our top 10. There's only a couple of calls that you could even consider remotely close to having any realistic probability of coming in the money. Now, obviously, these are not straight up plays where they expect the underlying to go up to 60 or 70 or 100. You can obviously do well without those kind of moves, but still, it is perhaps indicative of where we are right now in the vol space that almost the entirety of the top 10, Jim, is, shall we say, extremely optimistic call paper. Have you noticed this? And what are your thoughts on a lot of this outlandish upside lighting up the tape these days in VIX?
Yeah, the friend of the show, Dr. Russell Rhodes, sent me
that man is no friend of mine. How dare you speak his name on my show?
Sent me a chart of the VIX put call ratio that is carving out a high that goes all the way back to pre-COVID. So, you want to look at this and say, okay, maybe I don't know as much about options as somebody does, and maybe they're, selling call spreads or selling naked calls on the VIX, or else they really think that there's the potential for Armageddon, in the next 6 months. Sebastian may have better color than I do since he sits in the middle of this stuff every day, all day.
So what I'm hearing, if I read between the lines, Jim, is that you're not loading up on the pars at TOROSO right now.
I have trouble making sense of this. It's either hedges or somebody collecting premium.
It's almost certainly a hedge, Jim. It is usually a credit fund that's looking at its kind of worst case scenario type of stuff, and seeing that a spot where they could really blow out and clean that up with VIX, because a lot of this relates to credit spreads between treasuries and what other bond vehicles. So be it commercial paper or investment grade or junk grade debt. If junk grade debt, so if I'm a credit fund manager, one of the best ways to hedge basis spread risk, right? Because that's really what it is. The basis between a junk bond and a treasury. One of the best ways to hedge that is with using volatility, because when we see huge increases in volatility, that is when we see basis spreads explode. So what this trader is doing is likely hedging off some sort of extreme basis spread risk that he or she is seeing in their portfolio.
Mark, it sounds to me like Mr. Sebastian has been cultivating some new clients in the credit space.
I wish.
That's him loading up on the pars, Jim.
I just talked to these guys, and that's what we see. That's what 50 Cent was, right? He was a credit guy that was hedging off his portfolio risk. So, he had that one time he completely cleaned up. I want to say was it March of 2020 or was it during Volmageddon that trader really cleaned up?
I think it was March 2020.
Yeah, but the thing that he doesn't, so he completely cleaned up, paid for all of his hedging and more multiple times over, made hundreds of millions of dollars. And all that probably meant that his credit fund only lost some instead of completely blowing up. And that's really what a lot of this way out of the money stuff is. That big back ratio, the 35-75, the only difference between buying those pars and doing that back spread is that, the other trader doesn't want to pay for it and maybe has a slightly different risk profile.
Let's see what other paper we saw lighting up the tape this week on a truncated holiday week. Obviously, we were closed for the July 4th holiday here in the U.S., listeners, so no vol trading on Monday. Tuesday, we had a little bit more paper on the tape, about 418,000 contracts, so not the most active day, but nothing to sneeze at either. The most active contract on Tuesday, once again, back to the, dare I say it, optimistic strikes. We have the July 60s, 23,000 of those, followed by number 2, the July 40s, 23,000 of those as well. So perhaps a bit of a vertical there. Number 3, 20,000 of the July 30s. So all sorts of funky call paper going up there. But again, not as crazy, except for the 60s, not as outlandish as some of the other paper we're seeing. Number 4, 19,000 of the July 24 puts. And rounding out the top 5 on Tuesday, the AUG 40s, 19,000 of those as well. Wednesday, a little bit more paper on the tape, a little bit over 500,000 contracts, 517,000 to be precise. The big dog on Wednesday, 106,000. Once again, the AUG 75. This is our buddy here. And going out to the Marches. So is he perhaps, he was opening on the March 75s. Those are number 2, 100,000 of those. So was he rolling to the, let's see, how many of those AUG 75s? There's still 310,000 of the AUG 75s. And I think he had about 350 open last week. So he couldn't have rolled the full amount. By the way, number 2 was the March 75s, 100,000 of those, pretty much exactly. And then we fall off a cliff to number 3, 23,000 of the SEP 30s, number 4, 20,000 of the AUG 35s, and rounding out the top 5 on a fairly active day, 20,000 of the March 35s. So there we go, that 35-75 ratio that everybody loves out there. And Thursday, one of the more active days of the week, 658,000 contracts on the tape. The big dog on Thursday, back to the July 35s, 54,000 of those, followed by 50,000 of the AUG 75s. So maybe he was putting some more back on after he took some off the day before. Number 3, 50,000 as well of the March 75s. So there we go, that AUG 75 and March 75, but doing that dance again. Number 4, 28,000 of the SEP 23 puts. Rounding out the top 5 on Thursday, 24,000 of the July 30s. And then today we have a pretty light day, only 230,000 contracts on the tape right now. The big dog today, the July 26 puts, 21,000 of those. And then we fall off quite a bit. Number 2, the July 24 puts, 11,000 of those. Number 3, the July 30s. Those have been pretty popular all week. 11,000 of those as well. Number 4, the AUG 75s, 10,000 of those. And rounding out the top 5 today, the July 29 puts. Mr. Meatball, have you noticed our friend here playing a bit on the AUG and March 75s? And what was he up to? Was he rolling those?
Yeah, it was a big roll. So moving their duration out further. I guess we're close enough to that October position that, the closer expiration you get, the more violent a move you need for that back spread to work. And so the trader just moved his duration out. So gives up a little gamma for the next few weeks. But as we get toward October, that if we don't get a really violent move, that position can be a nightmare as opposed to a friend. So the manager needs to keep that rolled back until we actually start to get some sort of real move.
Yeah, interesting timing there on that roll. I thought they would let it run a little bit longer, but intriguing stuff. That also is still where we're seeing a nice little bit of premium for those AUG futures, and maybe taking advantage of some of that. Getting while the getting is good, and the AUG Nov time frame there rolling out to March, where I have to imagine we're a little bit lower. I have to go pull up March to see exactly, but I think there's a little bit of a discount there between those. Moving on out, some of the other vol products out here, see what's lighting it up this week. Let's go out to SVIX first. This is, of course, the inverse VIX product, one of the newer additions to the vol trading pantheon out there. It was about 11:20 when we kicked off the show. It's up about 0.8 of a point this week, probably coming in a little bit now as we're seeing vol start to move a little bit in the other direction. Not a lot of paper hitting the tape today, 145 contracts. The ADV has ticked up a little bit. It's up to about 800 contracts, up about 110 from this time last week, but otherwise not really a ton of paper out there in SVIX land. The big dog in SVIX right now from a top position perspective are the July 11s. There's 1,549 of those. So pretty much at the money calls right now. These are the monthlies, regular monthlies in July. And then 600 of the July 12s. That's pretty much about it. Everything else kind of pales in comparison. Yeah, SVIX still not catching fire for a variety of reasons. Hit us up, listeners. Have you guys been trading up any SVIX, either the underlying or in the options? Obviously, the options still not exactly blowing the doors off out there today, but intriguing stuff nonetheless. Let's go out to a product that seems to be doing a little bit more paper these days. This is UVIX. This is the 2X levered vol product. And again, doing a wee bit more paper, 2,700 contracts almost on the tape right now. So UVIX starting to feel its oats. By the way, coming into showtime, it was at about a 14 3/4, down about 2.5 points from where we were this time last week. That ADV kind of hanging out where it has been, up about 100 contracts or so. It's closing in on 3,500. So looks like UVIX is probably going to hit that today. And in terms of size positions out here, we actually have some decent paper. The top position right now in UVIX, 4,060 of the June 16 puts, followed by 3,800 of the July 16 puts, followed by 3,800 of the July 19 calls, 2,700 of the July 14 puts, number 4, 2,400 of the July 27 calls, and rounding out the top 5 in UVIX right now, the D's 18 puts, 2,000 of those. Mr. Jim, I'm curious for you. Obviously, UVIX and SVIX kind of coming online since the last time you have joined us here on the program. What are your thoughts of these two new entrants to the vol space? Have you played around with either of them? And do you maybe have a preference one over the other, sir?
Sure. I'm very happy to see them on the menu. It's been a long time coming. I am close to the issuer and using both products for different purposes. And I think we've seen the activity in both improve over time. The AUM is doing a slow build. The options activity still has to catch up to I don't know why people are still trading options in VXX, but maybe we'll talk about that later. But certainly UVXY is the big dog in this game right now. UVIX is playing catch up. SVIX is playing catch up. But in certain respects, they are at least as good as SVIXY and UVIX, or UVXY, excuse me. So I would expect that they'll continue to gain some momentum, some volume. And, people want to see that the underlying is trading actively before they'll get excited about the options. And so I think this is going to be more of a slow build to get these products where I think they will ultimately be. But I think they're wonderful underlyings, and the option activity will build over time.
Now, you say you've been playing around with them. Is that mostly in the underlying, or have you been dabbling in the options as well?
No, I've been using the underlying to express, short and long views on the direction of volatility.
Yeah, it's still challenging to do it from an options perspective. Obviously, UVIX doing a little bit more paper now, so it's getting easier. Things are getting tighter out there, but it still is. If you want to play with them, most people are still playing in the underlying. Mr. Meatball, is that your takeaway as well? Are you mostly, if you're utilizing these, are you playing around with the underlying still, sir?
Yeah, I mean, the underlying I think has enough, especially in UVIX, has enough volume where you can kind of get in and out. I mean, I'm looking at the market; it's a penny wide, so you can basically kind of, and thick, right? It's a penny wide and enough where I can get in and out of 5,000 shares, like, in a snap. And so that's a really good thing. And we're seeing UVIX slowly take volume from UVXY from a stock perspective. Options not yet. We need that option, the option contracts to pick up and tighten up. They're still way too wide to kind of really do anything. And we don't have weeklies in this yet because there aren't enough options activity to add weeklies. But when the volume does pick up, I think that'll be interesting. SVIX, kind of the same thing. Yeah. At some point, it's going to be a really interesting thing to hold in a portfolio for 3 months straight as vol's really coming off. But I'm gonna need VIX to get into the 40, the high 30s, low 40s before I start really dabbling in that. But it's an interesting way to try and pick a bottom at some point, because one of the things I really like about SVIX is that that the way they're rolling the position in the close is not just using the TAS, so you don't have that risk of just Credit Suisse deciding that they don't want to deal with it and wiping out all of their investors.
Like maybe Barclays is pretending to do these days with our other product that we much maligned product, which is of course VXX. Coming into Showtime, that was at about a 21, down about a point from where it was this time last week. Starting to do some paper again, about 62,000 contracts on the tape right now. The ADV is 67,000. That has continued to erode. That is down another 2,000 from this time last week. At some point, we'll hit a bottom. At some point, we'll start seeing the ADV grow again. We're just not quite there yet out there in VXX, even though there is still some paper open in VXX right now. In fact, the top position in VXX right now is 110,000 of the AUG 16 puts. So obviously, the top 10 is still all puts all the time, listeners. No one wants to touch a call in this thing, but 110,000 of the AUG 16 puts. That's interesting. And again, kind of looking to express this outlook that when and if VXX gets its act together, it probably will trend lower. Someone's got a pretty big axe to grind on the 16 strike now as a result. Number 2, we got 43,000 of the July 20 puts. Number 3, 41,000 of the July 19 puts. Number 4, 40K of the July 18 puts. And rounding out the top 5 in VXX, got about 40,000 of the July 17 puts. So it's a put palooza here in VXX, and that remains the case out there today. The most active contract out there in VXX today, almost 10,000 of the July 21 puts, followed by 4,500 of the 22 puts expiring today, so on the 8th. Number 3, 3,500 of the AUG 24 puts. Number 4, 2,000 of the July 22 halves expiring today. And rounding out the top 5 today, most actives in VXX, we got the July 46 calls, about 2,000 of those as well. Mr. Jim, it's been much heralded, the decline of VXX. I don't think we've chatted with you since all this kind of madness began. What are your thoughts on this Barclays kind of ham-fisted management of VXX and what we've seen as a result, the incredibly diminished interest in this product, sir, particularly from the options?
Well, I think, there are no creations or redemptions. Everything's frozen. And as a result, it's continued to trade at a premium to net asset value, which makes it very unpredictable to trade or to take an options position on. VIXY has benefited both in terms of AUM and activity, but it doesn't yet have, it doesn't have the same depth of option market that VXX had going into this catastrophe. And we're still waiting on Barclays to kind of unravel the mess that they've put themselves in. And we don't even know what they're going to do with VXX at the end of the day. They need to make at least one or more filings with the SEC. They need to unlock creations and redemptions. Whether they keep the product around or throw their hands up and make it go away is still a mystery. And so for me, VXX is untouchable right now.
Yeah, I think a lot of people feel that way. Hence the ADV continuing to just plummet out there. Mr. Meatball, are you of the same opinion? Are you really not touching VXX until they get their act together over there at Barclays?
Yeah, I mean, although I got to say, I like that August 16 idea. I mean, the August
I don't hate those either. Those are interesting.
Are a nickel. I mean, Jim, what's the net asset? What's VXX theoretical value? It's probably right around there. What's the theoretical value of VXX right now?
Well, the NAV, the closing NAV yesterday, was 21.26.
Okay, really? It's trading that close to NAV again, huh?
Well, it's within a few points, but or a few percentage points anyway. It's been trying to tighten up. But there still has been some premium there.
Yeah, so it's an interesting play, right? When this thing could go significantly lower, and they're a nickel. Okay, what's going to happen? Although 100,000 nickels, it does actually turn into a lot of money.
I think you're talking yourself into a trade, sir. I don't hate those either. I thought those kind of leapt off the screen a little bit to me as well. Like, oh, AUG 16. We like those, listeners. Are you a fan of AUG 16 puts out here in VXX? Intriguing stuff afoot. Let's see if anything intriguing is going on in UVXY. Coming into showtime, it was hanging out at right around a 13 handle. That puts it down about 1 3/4 points from where it was this time last week. The ADV coming in right now is about little north of 250,000 contracts, 256,000 contracts. That's down about 10,000 from this time last week. So still a lot of ADV coming off the rows here in UVXY. Today looking pretty active, about 194,000 contracts on the tape. So seems like UVXY is going to get there today. Before we break down today's activity, let's see what the big dog positions are out here. Number one in UVXY right now, nearly 14,000 of the July 16s expiring today, so out there in the weeklies. Then we go out to number 2, we got 13,000 of the July 20s. Number 3, 12,000 of the July 14 puts, also expiring today. Number 4, 11,000 of the July 39 calls. And rounding out the top 5 here in UVXY, we've got the July 15s also expiring today, 11,000 of those as well. Today, UVXY, like I said, fairly active. The big dog today, 16,500 of the 13 halves. Obviously, those are expiring today. It's pretty much all expiring today. Number 2, 12,000 of the July 14s. Number 3, about 12,000 as well of the July 13s. Number 4, 8,800 of the July 13 puts. And the only size contract trading today that doesn't expire today, these are the regular monthly July 14 calls, 8,400 of those. Mr. Jim, has UVXY remained on your radar? And what are your thoughts on this one this week, sir?
Well, UVXY remains on my radar, both as a way to express the view that volatility might be going higher, and because of the options ecosystem. And I keep close tabs with my buddy Michael Listman, who is the keeper of the keys to all things UVXY from my perspective. He's an active trader in the options, and it's still the place to go. I think if you want to use the options on the long product, right? We talked about UVIX not being there yet. UVXY has still got the vast majority of the options action.
It still is the big dog, at least for now. Mr. Meatball, same question for you, sir. What are your thoughts on everyone's former favorite? Maybe now UVIX is starting to steal some of that thunder, but what are your thoughts on UVXY this week, sir?
It's good to it's a good product to trade options on, but if I really want to get long or short using equity, I don't know why you'd use this product at this point. I do think, as I stated, though, the options there have some value.
There is a little bit of value left on the earnings docket. Not much, listeners. We are about to kick it off proper again in the next couple of weeks. So we are pretty much at the dregs of the tail end of the season right now. Unless, of course, you consider Levi's and Helen of Troy. Big names. I just love that ticker, Helen of Troy. If you've never heard of them before, they own Braun, VIX, not the VIX Vol product, but VIX like Vapor Rub and all that fun stuff. And then Honeywell and Pure, the water filters as well. They were popping off this week on the 7th before the bell. They were trading right around 170 as of their announcement. They were pricing in about 7%. They delivered over 9% to the dark side, so they surprised a little bit to the downside here. And in terms of names that are popping off later this week, we've got coming up soon, coming right back into it, listeners. We've got JP Morgan next week. They're on the 14th. They're pricing in a little fair bit of juice. They're trading right around 112 from our friends over there at Orats. They're pricing in nearly $4. In the past, they've moved $2.50. So Morgan pricing in some juice. Morgan Stanley, 14th before the bell as well. They're also pricing in pretty much double what they've moved in the past. They were trading right around $75.50 as of this report. They were pricing in $1.30 in the past. They're pricing in $2.60, and in the past they've moved $1.30. So a fair amount of extra juice being priced into the start of the new season. Let's go out to the airlines as well. Delta Airlines next week on the 13th before the bell. Airlines have obviously been a big source of consternation ever since the pandemic. Will they get going again? Will they not? We've seen all kinds of paper going up in these names for the last couple of years. Delta Airlines on the 13th before the bell, they were trading 29.5 as of this report. They were pricing in $1.80. In the past, they moved 86 cents. Wow. So we're looking at 2x pretty much almost across the board for all of these, JP Morgan being the exception, only about 1.5x there. But it seems like at least the early blush for this upcoming season, listeners, is more vol. Do you guys agree with that? Are you intrigued by that? Hit us up. Let us know. You guys know where to go to find these reports, by the way, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey. If you did that, you'd see that we are still monitoring for your trading and interest and or education on the earnings trades report. 93 long straddles, 42 short straddles, and 95 long calendars. No entries or exits today, but a lot of trades still being monitored out there. You can check all the performance out for yourselves, theoptionsinsider.com. Now it's time for us to get some of you folks on the show. Time to open up the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Vol voicemail, the portion of the show where you guys get to join us here, make your thoughts known. Also, you have a chance to play along in our polls. We had an interesting question of the week last week. I want to pay that one off first here. We asked you guys last week, which asset class do you feel has the best chance to turn positive by the end of the year? Gave you three choices: equities, rates, crypto, or other. And 45.2% of you chose equities. So that would be an impressive turnaround if that were to come to pass. Rates number 2, 35.5%, 16.1% for crypto, only 3.2% for other. So no love for some other. I was expecting some esoteric asset classes to be thrown in our face there. But alas, that is not the case. Let's go on out to this week's question of the week. We're asking you guys, the numbers hot off the presses from our friends over there at OCC for June. June appears to be the first chink in the armor for this year in terms of the overall volume was down almost 7.5% from June of last year. One of the first months of this year, we've really seen a bit of a downturn, but ADV still remaining firm, up about 4.5% through the end of June. So that opens up the question for the second half of the year, where will our total options volume, will that be enough to beat last year's record of nearly 10 billion contracts? We gave you three choices: heck yes, heck no, or what the heck's ADV? Let's go out to Mr. Jim first. What are your thoughts, sir, on our question? First off, are you surprised that 45% of our audience thinks equities can turn positive on the year from last week? That kind of surprised me. And then B, what are your thoughts here? You think we can beat last year's 10 billion volume number, or you think that's a bit of a bridge too far?
Let's see. Can equities turn positive by the end of the year? Of course they can. We've seen that kind of turnaround before. And frankly, I'm okay either direction, because I'll take the evidence as it presents itself. And, I wouldn't be surprised if we set all kinds of new records for volume, especially if we get a turnaround like that.
Yeah, options do love a bull market, so I guess one goes hand in hand with the other, right? If we do see that equities turnaround, then yeah, you're right. We might see that big turnaround. Mr. Meatball, what are your thoughts? Are you surprised that 45% of our audience think equities can go positive on the year? And then B, what do you think they're voting for this week? Can we beat 10 billion? Yes or no, sir?
I'm not surprised. I mean, it's not impossible. We could definitely see a rip-roaring rally, right? The Fed says, hey, we changed our mind and we're going to buy every bond we can get our hands on. The market's going higher. But do I think that we're going to eclipse 10 billion contracts this year? Gonna be tough. Because a lot of these meme names are where a lot of that volume came. It's still going to be a great year for options, but 10 billion may be a bridge too far.
Let's see what our audience has to say on this one, listeners. Yeah, there we go. And right now, heck no, winning 57.1%. 42.9% for heck yes. No love for what's ADV, which I'm actually glad to see. We have a very savvy audience, so you guys should all know what ADV is out there. That's a short one. You only have about less than a day left. So those folks listening on the podcast side, once you hear this, you'll still have a chance to vote. It won't be expired before you get a chance to vote. So we extended it for you folks because we're nice that way. Let's go out really quickly, see if we can squeeze on a question or two here. Let's go to... Jim, you've been busy tweeting up a storm here during the show. You got any interesting queries coming in, sir, before we get to some of our listeners?
Nothing I wouldn't expect.
Let's go out to this question then here from Elevate with an 8. He or she wants to know, why don't we hear more about calendars in VIX? Is this just not a product that lends itself towards time spreads? Are most of the people too busy just buying calls, puts, and verticals? What do you Volatility Jedi? I like that, the Volatility Jedi. I'm gonna have to rename the show. What do you Volatility Jedi think of this strategy when it comes to VIX? Yeah, we do see time spread. We talk about these a lot. I mean, we start the show every week talking about the vol surface, right? And there's always a nice little blip in it. This year, it's around the October-November timeframe, so that it sets things up for a lot of intriguing calendars. We also saw this week folks rolling, so effectively legging into time spreads there on the 75 strike. So we do see a lot of time spreads going up here, but also we do see big explosions of verticals and ratios and 1x2s and just straight call buying and put buying as well, because that's also where a lot of the action is. Maybe we should work harder to surface those for the folks. Mr. Mark, what do you have to say for Elevate here, who wants to know, why don't we hear more about calendars in VIX?
Why don't we hear? Well, you'll see calendar futures trade, but not as much in the options because it's just inefficient, and each month kind of trades by on an island. And so while October and September correlate, it's not like a regular stock where you get that easy 100% correlation of the underlying. The underlyings don't correlate at 100%. That makes calendars kind of difficult. You're really trading two separate vols, two separate underlyings. It's just difficult. If you want to trade a calendar in VIX, do it in the futures, not in the options.
There we go. As we keep on rolling, it is time for the most difficult, the most dangerous portion of the show, listeners. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. As they say out there, let's get dangerous. Coming into the end of the show here, we have spikes at pretty much exactly a 25, and then we've got VIX at about a 24.80 or so. So they're giving up a little bit of what they had at the beginning of the show, about half a point for spikes and about pretty much half a point for VIX as well. So they have given up a little bit of their juice as we are seeing the market try to struggle to get back to unched on the day. It's pretty darn close to it right now. So now no longer in full-on sell-off mode. Maybe we can go back green by the end of the day. That means looking at our predictions from last week, we had the Flow Master joining us on the show, Mr. Henry Schwartz from Trade Alert. He was at a 28.80. Mr. Meatball is at a 26.62. He does love his palindromic numbers after all. I was at a 27 double. So, spoiler alert, no winner chicken dinner. Out there on the listener front, Options Queen not looking bad at 24.40. You're pretty close. You're about 0.4 of a point away in VIX. So congratulations there. You did better than all of us on the panel, even though not within our 1/10 of a point margin of victory. So everybody else had a 30 handle or a high 27. Oh, Munster had a 24.60. So that's even closer than you there, Options Queen. So there we go. Munster slipping in. Also not quite there, but pretty darn close, Munster. So I tip my cap to both of you. You both did better than all of us here on the panel last week. Let's see if we can amend that. Mr. Jim, you weren't on last week, so you did not have a chance to lose like the rest of us. So what are you feeling for this time next week from a vol perspective, sir?
Oh, my goodness. we've got another Fed meeting.
CPI next week and PPI.
CPI, but we're watching Vol just crater on us here today, so nobody seems to care. And so I'm going to be really stupid and say we get down to 20.5.
Wow.
All right.
Wow.
Mr. Jim laying down the thunder here. Interesting.
I just clicked send on a bunch of puts based on that. Back up the truck.
Hey, I'd rather be big wrong than a little right.
I like it.
We're in the entertainment business here, aren't we?
Yes, all about the entertainment, sir. So go big or go home. Mr. Meatball, you going big or you going home?
Back up the truck on my UVXY 13 puts for Friday. Just back them up. No, I'm going to say I like Jim's idea. I don't think we can get there. I'd love it if he was right. But I'm going to say 23-32.
You must spend a lot of time thinking up these palindromic numbers for the show.
Yeah, it takes a ton of time to think about that. Yeah.
There we go. So Mr. Jim at a 20.5, Mr. Meatball at a 23-32. That leaves me, listeners. I'll be the odd duck going a little bit higher. I'll say 25 double, so right about half a point north of where we are right now. So there's your vol market for this time next week. You guys agree, disagree, hit us up. Let us know, listeners. Unfortunately, that's going to do it for this episode of Volatility Views. But before we go, Mr. Jim, if folks want to reach out to you, check out what you have cooking in the land of TOROSO advisors, where should they go? What should they do?
Well, the easiest way to track me down is on the Bird app, known as Twitter, where I go by the handle @VIXologist. And my direct message is open, so people can contact me there. That's probably the best way.
A bunch of our live listeners are all going 28, 2570, 2680, 2703, so mostly higher outside of you guys here on the panel who are fading lower. Interesting. Jim, going big or going home? Check him out over there @VIXologist. All one word on the old Twitters. He's pretty busy. In fact, he was tweeting out a lot of great charts and things even during the show. So if you want to see what he was tweeting out, check him out @VIXologist over there. And Mr. Meatball, where should folks go if they want to get a full dose of the land of the pit, sir?
Go to optionpit.com, and I write a VIX and volatility blog every day. It's worth a read. Optionpit.com. It's called the VIX Edge. Give it a read. You'll like it. It will help you become a better trader.
There you go. @VIXologist for Mr. Jim. Option Pits is the place to go.com, or @OptionPit on Twitter for the Meatball as well. And of course, you guys know where to go to learn more about all things spikes. MIAXoptions.com/spikes. They have some cool new things in the offing. Not sure if they're live yet, but they should be coming post haste. So keep an eye on that page. Should be fun stuff going on there. And on behalf of Mr. Meatball and Mr. Jim and the folks over there at MIAX, and indeed myself, I want to thank all of you out there for listening. That will conclude our broadcast week for all of our on-demand folks. For all of you cool cats in the Secret Club, we'll be back in a little bit with Options Oddities. And we're back again next Monday with the option block all the way through to another Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIKES Volatility products. SPIKES options and futures are traded on the SPIKES Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.